Okay, continuation of chapter 2. I think this is the fourth part already. So, for the subject, church financial management. Okay, continuing on. Next, we have income, revenue, and gains. Okay, the first three, asset, liabilities, and net assets, these are shown in the statement of financial position, or sometimes we call it balance sheet. Okay, we call it balance sheet because the total assets must equal the total liabilities and net assets. Okay, and then the next part, income, revenue, and gains, and expenses and losses. These form part the statement of income or comprehensive income, but that's for business organizations. For non-profit organizations, especially for churches, we prefer to call it statement of activities. Okay, so statement of activities. Again, income, revenue, and gains. So the income revenue for churches would normally come from contributions from the members, tithes and offerings, and then their pledges for missions, building, the vehicle and the Bible school, or sometimes donations. The occasional donations would also be recorded as income and revenue. Okay. For the gains, let's say this would result from selling something like a property of the church. For example, an old vehicle. If they decide to dispose the vehicle because it's already old, maintenance is getting expensive, they want to purchase a new one for safer transportation as well. So they can sell the old vehicle, and if they sell it at a price higher than the carrying amount of the vehicle, then they can recognize gains. Okay, but of course, the opposite of that is that if they sell it at a price lower than the carrying amount of the property or the asset, then they have to recognize losses, okay, or loss on sale. Okay, going back to income and revenue, other than the contributions, they can also recognize interest and dividend from investments. Okay, and then fees received for program activities conducted by the church. Okay, if any. Okay, again, this would depend on the policy that the church has in place. Okay, sometimes we would have activities for certain groups, the youth, the career, the adults. Okay, but normally for auxiliary services, or sorry, auxiliary programs or activities, we no longer contribute to the church, but to the group only. Okay, and then if there's any excess fund during the activity, it's going to be, saved and used for the next activity of the group. Okay, but some churches would have, policies that any excess would be added to the general fund of the church. Okay, but then again, it would be a matter of policy depending on the church policy. Okay, and then expenses. Normally we have operating expenses for the salaries, utilities, repairs, maintenance, transportation, and so on. Okay. Um, Most common example of a non-cash, sorry. So for the most part, itong mga these expenses that I've mentioned earlier, so these are normally paid in cash by the church, but there is another type of expense considered as non-cash expense. This is the depreciation. Okay, so depreciation is a non-cash expense that represents the using up or deterioration of a long-lived asset. So it applies to property and equipment, or fixed asset, or non-current assets. Okay, so for example, a vehicle, again, because they are being used for a period of time, not just for 1 year, so the cost of the property would be allocated over the years that they are in use. Okay, and we call that process depreciation. And the expense being recognized every year, we call that depreciation. expense. Okay. For financial reporting, we have to recognize depreciation for each year that it was in use. Okay. And then, for example, 1 million for 10 years. So for every year, the church must recognize 100,000 for every year that is in use. Okay. But for budgeting purposes, the reason why we include an amount normally equal to the depreciation is that so that we can accumulate a fund for the eventual replacement of the fixed asset. Okay, so time will come that that particular asset will no longer be usable, so we need to replace it. So that's why over the years we must also include in the budget, a portion to accumulate enough amount to buy a replacement later on. Okay, so there is that. Okay, but you will see in the statement of activities the depreciation expense. It would appear there. Okay, and then you have other resources for detailed accounting guidance. If you want to learn more, so you can just check out these resources. Next, we have church accounting methods. So we have GAAP, cash basis, and modified cash basis. Generally accepted accounting principles, essentially, these are not exactly standards, but what do you call that? Somehow there is a understanding among accountants all over the world that these are what we're going to do. Okay, so essentially it has something to do with the classification of certain transactions. We have this so-called substance over form, wherein sometimes the form of a transaction is not what you're going to base on for it to in the recording process, but you have to look at the substance of the transaction. So for example, the unearned revenue. From the name of the account, unearned revenue, is it a revenue or a liability? Okay, because you have the revenue in the title. Okay, but essentially it's not a revenue, it's a liability because it's, unearned. It is yet to be delivered or to be served or rendered by the company. Okay, so that's just an example anyway of a generally accepted accounting principle. Okay, another would be going concern. In recording transactions, we use cost instead of the market value of the assets of the company. Okay, there is what do you call it? Going concern, an assumption that the company is going to continue operating in the years to come. Okay, so that's why the assets are recorded at cost. Okay? All transactions are recorded at cost. Whereas there is another term, the opposite of going concern, we have the liquidating concern. Or it's when a business or an organization is believed to be nearing its end, okay, or they already have plans to close the business. So in such a case, instead of using the historical cost, they would use the market value because, as a business now looking at, closing, so they're probably going to sell their assets. And when they do, they have to take into account the current market value of the assets that they have. So they're going to use their market value. Okay, anyway, that's just, segue example of GAAP. Okay. Another here, this is the main. Revenues and expenses are recognized as they are incurred rather than when the organization receives or pays the cash. Okay. So for example, the tuition, it was paid at the beginning of the trimester. So it's not yet recognized as revenue because the teachers or the school is yet to deliver the lessons. They are recognized as a liability. Okay. And then as the lessons are delivered, the school would now recognize the income from delivering the lessons. Okay. So the revenue is recognized only when the service is already rendered, okay? Not when the cash has been received, okay? And then for the expenses, it's the same when they are incurred and not when they pay the cash. So for example, utilities, the electricity has been used already, so there is an expense, although they are yet to pay because they're waiting for the bill or the statement of account, but essentially there's already an expense during that period. Okay. Um, ayun. So that's the primary primary distinction ng gap. Alright, and then there are other examples here, so I can just read them. We have the accrual and the deferral. Accrual is when you recognize the income and the expense before you pay for them or before you receive the money. Whereas the deferral is that either you receive the money first before you deliver the service or the products, or you receive the money first before using the service or incurring the expense. Okay, as in the case of renting a building. Okay, you pay first before using the building, so that's deferral. Okay, so opposites, accrual and then deferral. In accrual, again, that's it. You use you use the what do you call that? You incur the expense first before you pay, or you earn the revenue first before you are given the money by the client or the customer. Okay, and then in deferral, the receipt or payment of the cash happens first before you use the service or before you render the service. Okay, so that's the gap essentially. And then the cash basis is that you record the transactions when you pay the cash or when you receive the cash. Okay, so that's why it's called cash basis. You record the revenue when you receive the cash. So in the case of that person paying the tuition, even if the lessons have not, been rendered yet, because the student paid at the beginning of the trimester, the payment would be recorded as revenue already. Okay. They would not wait for the rendering of the service. And then for the payment, they would recognize the expense when they pay the bill, okay? Even if they were already, incurred or used the service even before paying, right? So that's the cash basis. And then the modified cash basis, essentially you're going to have to choose, what they call it, certain accounts which you would use the cash basis, and then for other accounts, you would use the accrual basis. Okay, so it's essentially a mix of the cash and the accrual basis. It would depend on the accounts that will be applied. Okay, so you have the modified cash basis. Many churches use the modified cash basis for financial reporting. Okay. Personally, since the revenue of churches would depend on contributions of the members, it's good to recognize them as revenue as the church receives the money. Okay. Although there are, pledges and there are supposedly commitments from members to contribute a regular amount every year. Life happens, changes happens, their situation can change and their giving might be affected. So it's best to recognize revenue as the church receives the money. Okay, so in that sense, that's cash basis. But for other things, like in recognizing revenue and other revenue and expense, so they can use the accrual method, right? So that's modified cash basis. For external financial reporting, so the SEC requires registered corporations to submit audited financial statements. Okay, financial statements, it's actually a set of financial reports. Okay, and normally they do follow the GAAP and the accounting standards. So the components, we have statements of financial position. Again, they are called the balance sheet. Um, they report the assets, liabilities, and net assets of the church. Okay, it's called balance sheet because the assets must equal the total of liabilities and net assets. Okay. Next, statement of activities, also referred to as income statement, but again, for non-profit organizations, um, income statement doesn't sound right, so they call it statement of activities instead. Okay, so you have your revenue minus expenses, then you have your net profit or excess of revenue over expenses. Okay, and then you have the statement of cash flows, cash inflows minus the cash outflow. So essentially, this is the application of the cash basis. Okay. Um, but it's a separate statement. Okay. And then the cash flows are classified into three categories: operating cash flows, investing, when the church would buy PPE or fixed assets, either buy, acquisition, or disposition, it would fall under this. And then financing, if they are looking at, increasing their equity, but again, churches don't have equity. Members contribution, yes. And then, okay, it's a different, what do you call it? It's a different story for business organizations. Okay. Statement of functional expenses. Essentially, this is a type of statement of activities wherein you classify the expenses based on their functions. Okay, but for the most part, that's already what we do in creating a statement of activities. We classify the different types of expenses based on their functions. Okay. And then we have the notes to the financial statements. Normally, the others are called the face of financial statements because you can see the items, particulars, and then the figures, right? But most of the time, there are no explanations on certain items in the face of the financial statement. So any explanation would fall on would be included here in the notes to financial statements. Okay. So what composes the bulk of financial statements is the notes. Okay. Sometimes this would include the breakdown of the cash component, the receivables component of the PPE. They break down how much is in land, building, vehicles, office equipment, furniture and fixture. So any breakdown would also be shown on the notes. Okay. Alright, and then further explanation on how to prepare if they are under cash basis, modified cash basis. Okay. And then church accounting software. Normally these are used by medium and large organizations, but for small organizations, small churches, using Excel would suffice in, accumulating or recording the financial transactions of a church, okay, or an organization. Okay. Application of technology using cloud as a storage. Okay, but you can just use your computer, Google Drive, or maybe a flash drive. All right. But of course, other considerations would be security of data, data security, and then at other times, some churches, normally yung, medium and large organizations would outsource their accounting and financial reporting. So instead of having an accounting and finance department within the church, they're going to outsource it to, let's say, an accounting firm or a payroll firm or whatever. Okay. But again, for small businesses, small organizations, small churches, normally they just, do it themselves. And for the most part, the transactions are simple and very few in number, so recording is not that um, burdensome. Okay, so we have that, and then retention of church records here in the Philippines. Normally it's 3 to 5 years, but in case of fraud, you are required to show documents for up to 10 years. So to be safe, it's 10 years, okay, for whatever document it is. Because if you're being investigated for fraud, fraud can be investigated, for up to 10 years. That's the prescription period for, filing a case or what do you call that? Investigating a fraudulent case. So 10 years would be your best bet. Okay, any type of um, document. Although you can have this record retention schedule, but again, 10 years for the most part. Okay, and then this one, the provided info here on the book. This is US based, so I'm just going to skip over this. Okay, so that's it for this one. The remaining discussion is about the financial statement.